Bitcoin represents digital gold. It's the best idea for money in the 21st century. It is the world's most liquid, most fungible commodity asset. It's, it is saleable, so, and it's better than gold.
As an investor, is this the time to hold back and wait or make money?
My view on investments is I'm extraordinarily enthusiastic about digital capital. That is, Bitcoin is digital capital. I think that's the no-brainer because it has all of the appeal of a digital monopoly, a monetary network. So if you imagine a Facebook for money or a Google for money, it has the technology trend on its side, and it also represents digital gold, and there's an extraordinary enthusiasm for non-sovereign store of value assets right now. So if you're looking for a way to avoid counterparty risk, to avoid a currency risk, and to tap into a global technology phenomena, then that makes sense.
Is it a safe haven?
I think it is. I think
on par
Bitcoin,
with gold?
Much better than gold. I think that Bitcoin will be 10x, an order of magnitude more valuable than gold, and it will grow 20% a year. Beyond, when it's 10 times bigger than gold, it'll be growing 20% a year. So yeah, it's I think the best investment idea in the world. I don't think there's a second best investment idea. I think that there's $450 trillion of wealth in the global economy that's sitting in store of value assets. You could call it long-term capital. Like, people just want to keep their money. And right now, if you have a lot of capital, you would buy real estate, you would buy private equity, you would buy public equity, you would buy collectibles, you might buy trophy assets. All of those things were pioneered in the 20th century. I don't have to tell you about the reason people buy them. I could write you an encyclopedia on the risk factors, right? Your buildings burn, hurricanes, flood you out. There are rent controls on your property. There are tariffs. Everybody in the world is in a tariff tantrum right now. Every single, what they say, the best laid plans of mice and men, they're dashed, given a change in the political wind. So I think there's profound conventional risk in private equity and public equity. Bonds all have massive risk because they're all currency derivatives. Mm-hmm. Trophy assets and collectibles like art, they have cultural risk. If you collect Picassos and the culture decides they don't value Picassos anymore, then your wealth is devalued. So I think when you look at the 21st century, the question is, how do I keep my money? Right? If I gave you $1 billion and I dropped you in Africa and I said, go ahead and buy anything you want, you can buy a diversified portfolio of real estate or equity or currency or bonds or anything at all in any country in Africa, or you can buy digital property that sits in cyberspace worth the same $1 billion, and you can move it on a thumb drive, or you can zap it from point A to point B on your phone, and you can custody it anywhere in the world on an hour's notice. I think you would choose for option B, and option B is what Bitcoin represents. So what I see today is increasing uncertainty. People are losing confidence in governments. They lose confidence in currencies. They lose confidence in business models. Right? You got a great company, you have 1 million employees, but I'm about to automate out 957,000 of those employees with robots. Is that good for you or is that bad for you? Lots of risk in the world due to technology, due to politics, due to monetary policy. So what do people with wealth want to do? They want to run from the risk. Okay, I give you $1 billion of Siberian real estate, you can trade it for Bitcoin, would you? Of course you would. I give you $1 billion of Africa, you can trade it for Bitcoin, would you? Of course you would. I give you $1 billion of anything in Brazil, Mexico, Russia, pick any country. The general dynamic in the world's macroeconomy is this. People all want to move to the United States. People want to buy United States assets. People want United States currency. They want the most secure, the S&P index is up 10% a year in the US. The European equivalent, 1%, 2%. So what is the world trying to say? It says that the dominant network is the one we want. We don't want the second best or the third best. So the big picture here is, in a world where people with wealth, with capital, are looking to preserve their money,
Yeah.
how do you save it? And it's very simple. I convert my money from 20th century assets to 21st century assets. I convert from analog assets to digital assets. I convert from assets that are subject to nation state risk in Ukraine or Russia or Brazil or
perhaps
Africa.
right here in America.
Or in America. And when you lose confidence in your government, and I can find a large plurality of investors in every country on earth that have lost confidence and faith in governments, banks, industries, etc. When you lose that confidence, you run for a safe haven.
Yes.
What do you want to do? Put your money in orbit, right? In this case, there's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no monetary debasement in cyberspace. There's no bank to steal your money in cyberspace. There's no wars in cyberspace, right? So what's driving Bitcoin? It's not speculation. It's not accidental. It's the relentless passage of time that's causing intelligent, informed capitalists to strip risk from their portfolio by converting a 20th century asset into a digital asset. It's like water flows downhill when you're staring at a waterfall. It's not accidental that the water went downhill. It's not accidental that time moves forward. It's actually the relentless passage of entropy. It's the relentless act of informed people that want to keep their money acting rationally.
Is Bitcoin a hedge?
Over the long term, it is, yeah. And really what it is the future, right? If Bitcoin's growing 55% a year, it's going from what was a few million to a few billion to 100 billion to a trillion to 2 trillion. It's 2 trillion now.
Yeah.
It's going to 20 trillion over the next 4 years to 8 years, and it'll be $200 trillion in 20 years. My forecast is for it to be about $280 trillion by the year 2045. You could call that a hedge, but it's kind of like a hedge in the way that the United States of America was a hedge for Europeans when they were fleeing Europe for 200 years.
Yeah.
It's just the next frontier of economic development.
Gold. Physical asset. Bitcoin, cryptocurrencies generally, people say we can't hold it, we can't see it. Is that a psychological shift in your mind? Because it's essentially just assigning value to something perhaps they cannot see.
You know, the classic idea of money is the most liquid, fungible, saleable commodity asset in the world. And so for thousands of years it was gold. Gold was the best idea for sound money in the 19th century. In the 20th century, gold wasn't fast enough. You can't move gold back and forth across the Atlantic an hour. You can't settle with it. There's no way. There's 400 million companies in the world. There's no way for 400 million companies to settle with each other with gold. Right? Just not happening. It takes a decade to settle $10 billion of gold across the Atlantic. You know, a year would be fast. No way you're going to teleport $10 billion of gold in a couple of seconds. No way you're going to put gold on 5 billion smartphones. No way that the computers are going to vibrate or program the gold to transform itself 1,000,000 times a second. And gold, like it or not, is inflating at 2% a year. 2% a year inflation means that the half-life of your wealth is 35 years. Bitcoin is 0%. 0% inflation means the half-life of your wealth is forever. It's the difference between economic immortality and a useful life of 70 years, maybe. So gold was a good idea. It was never a perfect idea. You know, if you read the history of the Rothschilds and go back to the 19th century, the Rothschilds traded sovereign debt. They traded credit instruments issued by governments, and that was the high frequency money, that sovereign debt. And then when they had a cash settlement referred to, we actually swap gold bullion or gold coin, but we don't do it often because it's very difficult and dangerous, and sometimes you lose the gold. So cash settlement was always difficult hundreds of years ago. 1,000 years ago it was difficult. with Bitcoin, it's different. You can now settle. I can trade $100 million a day with you, and we can settle every 4 hours.
Yeah.
Right? And so Bitcoin represents perfect money. It represents perfect capital as digital capital, and it's a basis to rebuild the entire digital economic system. So, yeah, it's the promise of gold, but it's 100x better.
So if it's the perfect capital, why aren't we using it to pay for things?
Yeah, because you don't pay for things in capital. If you roll the clock back 200 years, the Rothschilds didn't pay for things in gold either. It turns out
why am I not using it on my phone? And why am I not using it to purchase something at, the
Okay.
ice cream that we were seeing this penetration happening, and it's slowed down?
Because money has two aspects. One aspect of money is high frequency money or payments. That's currency. When I actually buy a coffee, I'm buying a coffee with currency. I'm using the peso in Argentina. I'm using the dollar in the US. I'm using the euro in France. Nobody holds the currency for more than 4 years. If you're in a hyperinflating economy, you wouldn't hold the currency 4 months. Typically, the way the world works is you have local currency, which you would hold for weeks to months, like the peso or the Egyptian currency or the Lebanese currency, but no one's stupid enough to hold it for a decade.
I don't know if anybody would be holding the Lebanese currency.
Yeah, maybe, yeah. But the point is, by law, you have to use it for legal debts, and so they do exist. The world's got 100 local currencies. Most of them are very weak. The world reserve currency is the dollar. You would hold that for 4 years. But there's no rich person on earth that'll brag to you that 90% of their net worth is in dollars. You won't find a single billionaire that has the majority of the net worth in dollars. Nobody saves in dollars. They save in capital. So there's another aspect of money. It's long-term, low-frequency money. It's the money I'm going to hold for between 4 years and 400 years. What is that? It's land. It's a sports team. It's private equity. It's the Mars Corporation. It's public equity. It's my Magnificent Seven stocks. It's a diversified portfolio of stocks. It might be gold. So if something is perfect capital, that means you can buy it, keep it for 100 years, and your great-grandchildren will be rich.
Yeah.
I have a house in Miami Beach. It cost $100,000 in 1930. Mm-hmm. It's worth $100 million right now. 99.9% collapse in the value of the dollar. If you'd taken the $100,000 and you put it in a safe deposit box in the basement, you'd have 100 grand. That would pay about 3 months. It would pay about 6 weeks of property tax on that house. Nothing. You couldn't even run it's a month of fees. If you took the same 100,000 and you swapped it into real estate, it'd be worth 100 million. Why? Well, because the government can't print more beachfront property. They can print more currency. So the bottom line is, if you're going to pay for something, a cup of coffee, you want to pay for it with a weak currency, which is a legal tender. They're all collapsing. The dollar is losing 7 to 10% of its value a year. But the weaker currencies, the risk-free rate in Brazil is like 15%. What that is telling you is the government is increasing the supply of real by more than 15% a year. The risk-free rate in Turkey is like 45%. Okay, so you definitely want to pay for stuff with the collapsing currency. And the smartest trade imaginable is you borrow a lot of money in a fiat currency, which is losing value, and then you buy a capital asset. Like the richest families in New York, they borrowed money, they bought real estate, right? Real estate's getting more valuable over time. The dollar is getting less value, but the peso has collapsed to zero 5 times in 100 years. You don't have to explain it to an Argentinian why they wouldn't save in pesos.
Yeah.